right, welcome this morning on this Wednesday morning. We're here today to talk about leveraging technology in your planning and reporting processes. We're hoping that we can share some knowledge with you today that you can take back with you and make your life a little bit easier. I imagine some of you are just coming off of the whole budgeting process back at the end of last year, and you may still be recovering, have a little bit of PTSD from that. And so hopefully this won't trigger you on that, but we're hoping to go over some ideas of how to help. The agenda today, we'll do introductions, then we'll just talk about some common struggles, and I imagine all of you will easily relate to that. Then we want to show you a tool that illustrates how you can solve these problems. And I want to reiterate here that we're not, there are many tools that can do this. We're using one today just for simplicity to show you how technology can help you with these things. But there are, of course, options for what kind of tools you use for your budgeting and planning. And we're just going to be using one today called Adaptive Insights. And then we'll have a Q&A time, so don't hesitate to put those in the chat as your questions come up. You won't be interrupting us, but then we can collect them all for our time at the end. Again, this is an hour session for your CPE. Hopefully this is just the easiest and best CPE you have all year. So so for our learning objectives, this is just for your CPE to make sure that you get something out of this so that you can take this with you. So let's dive right into our introductions. Okay, introductions. We've got Stuart, a partner in our practice, and then I'm Dana Larson. I'm a senior manager in our FP&A practice, and Don Kosegi will be doing our demo today. He's a manager in our FP&A practice with tons of experience, and I've worked more with ERP implementations. A lot of my career has been actually with NetSuite, but I am certified in Adaptive Insights now. Don has been in your seat as a financial planner, both working in the FP&A group, both as a client and then as a consultant. And so he's got a lot of experience and has sat in your seat. So hopefully he can connect with you and relate to what you're facing. I want to do a quick slide on Eide-Bailly just to remind you. And first of all, it's Eide-Bailly is the name, and hopefully most of you are already customers of ours. But if you're not, I know it's always tricky for people to say it. So we like to say, I'd rather work with Eide-Bailly. So the Eide is Eide. Okay, core services. This is what Eide-Bailly does, this whole list of things. It's a traditional tax and audit firm, but we have a large technology consulting practice, and you can see that highlighted in this slide. And inside of that, we have different products that we represent, and one of them being FP&A. So we we both sell FP&A solutions and implement them and do support ongoing. And so that's what we're talking with you about today. You can see our map of the states we work in and where our offices are. And so just to give you an intro on Eide-Bailly if you're not familiar with us. So our first polling question, and remember you do need to submit an answer for your CPE. So what does FP&A stand for? And please select one of these, and then we'll see our answers. 89% of you got it right. Excellent. So now this is the sheet that if you're going to get triggered over budgeting, this is it. So planning and budgeting issues that you face. I think the most common one that I've seen in my consulting time is that spreadsheets break if we haven't properly locked down formulas. I've seen it where someone hard-coded over a formula. They just typed in a number at some point because they were trying to get to the results they wanted, and they didn't realize there was a formula. And then that hard-coded number persisted, and sometimes for a year, the people working with the plan didn't realize that someone had typed over it. So for all this time, there's been this number plugged in somewhere. It's super frustrating and so easy to happen unless you lock it down. Consolidating spreadsheets is difficult and error prone, which is the most recent. I've been in meetings where someone pulls up their budget and then someone else says, no, that's not the latest version. I made a change to that. And why are we looking at this one? The business owners closest to reality don't have the proper input. Maybe they know something. They're the ones feet on the ground. They know that maybe the cost of a trade show, for example, just went up, but they have no way of getting that information into the plan. They have to move that up the chain. Often the budget becomes stale after a couple of months as things change. Life changes and your plans change, and so by the time you get into the midway through the year, everyone will start ignoring the plan because they feel like it's not relevant anymore. Why do we even have this? And it just becomes okay, we have to run a budget to actual, but we have so many adjustments to it, it really makes no sense anymore. Assumptions for budgeting vary and they can be incorrect. So your assumptions that you make at the beginning of the year can change. Maybe there's a regulation or even withholding on client or on your employee accounts for payroll, things like that change, and all of a sudden everything isn't relevant because you're not able to easily make changes to those assumptions. Also, if you let the assumptions get into the hands of all of the users, then you may find that you've got different assumptions across the board and your budget is no longer consistent or valid because you've got so much different people, different cooks in the kitchen making different assumptions. Also, comparing the changes across versions of plans. So let's say you're in a meeting and someone says, well, how is this one different? How is this budget different from the one that we looked at last week? If we're now supposed to be, giving our okay on this budget, pulling up two spreadsheets and trying to compare those and figure out how they change can be very difficult. Then also for reporting, and I was thinking about this, I saw on our registration a lot of you are in the not-for-profit world, but even in the for-profit world, when you're creating your end-of-month reports, and so it might be a board report, might be a bank report, just a report to executives. If you're in that area of reporting on budget to actual, how do you update the numbers? Let's say you get into it, your board meeting's the next day, you're trying to get all your reports in place, and someone in accounting reports that, oh, we forgot to do this accrual, and now you have to redo all your reports and all your numbers and make sure that they're all correct. And it turns into an overnight effort because you've got your board meeting the next day. Also, a lot of non-value add work. If you think about, you're talented professionals, and here you are trying to tick and tie some numbers because you had to make a change in let's say your ERP, and then you have to pull that through to your spreadsheets, pull to your PowerPoint presentation, resulting in just a lot of non-value add work. I'm sure none of you have ever experienced any of that. Hopefully you looked at that and thought, no, that never happened. All right, let's go to our second polling question. What is the FP&A best practice for planning time frame? How frequently, how often, what should it be? Let's give this one a shot. All right, looks like 59% of you said continuously, and that is the best practice. Right now, I know it's hard to achieve, and especially hard to achieve if you're doing your budgeting and planning in a very manual way. That's going to be tough to do it continuously. And so now what we're going to do is we're going to pass this over to Don Kosegi. I just went back too far. And Don is going to display his screen, and he's going to show us some ways to solve these problems with the tool. It's called Adaptive Insights, and it's a product that you put in on top of your ERP. It's not meant to be an accounting system, but it is a reporting and planning and budgeting system. And so he's going to demo that for you, and then we'll leave some time afterwards for questions.
Thank you, Dana. Like Dana had mentioned, Excel does have its limitations when it comes to budgeting and planning. It can function pretty well for smaller companies, but as you start to grow or as things start to move quickly, it can break down. One of the advantages of using a system like Adaptive Insights is you're less likely to overwrite a formula. You're not going to break something while you're doing it. You're going to know what the most recent version is, so you have control over which versions people are editing. You also have the ability of comparing multiple versions across each other. The tool is web-based, which also gives the advantage of being able to access from anywhere. So people don't necessarily have to be physically connected to your network in order to get to it. Interfaces within Adaptive are built. Everything is designed. You have the ability to customize it to your needs. So while it does have some basic structures out there, your chart of accounts that you have within Adaptive, your org structures, all of your reporting capabilities are designed for your company and your industry. So it works across industries, works across companies very well. Within the tool itself, one of the things that Dana pointed out was the whole thing about, well, that's not the most recent number. You know, you're in that meeting and something changes on you. One of the things with Adaptive that's nice is everything is real time. So if someone is entering a number into the system will automatically process all the calculations going on and then provide real-time answers. So if you are in that meeting, unless somebody actually physically changed it right then, you're going to be able to update your reports and any of your files prior to walking into that meeting. But as an example, here's a simple report that's online within the Adaptive tool. And we are going to show another reporting tool with Adaptive in a little bit that's a little more designed for things like board reports, monthly reporting packages, things that have very specific formats that you want to preserve that your company has. The online reports are a little forced into certain formatting, but they are very powerful from an analysis standpoint. So you can use them to evaluate data with it. But as an example, we have a column here that's our first pass of a budget. And then we have a column here that I've created for this new demo version that we're going to enter a change into the system. We're actually going to make a change that's a little complex, but the system will do all of the calculations for us, and it's a staffing change. So if we're focused on a specific business unit within the company, but we have the entire org structure of a company here, and this would match your structure that you have. So you can have it, you know, your G&A departments, more overhead, your operating departments, everything is available, and security within the system is set up by user. So if I have a user who is only doing sales, their view could only include the sales. They won't see all of the other pieces. So you have the ability to focus users into specific areas. So they won't be cluttered with extra pieces that they don't need to see. You also keep data from them that they don't have rights to be able to see, including salary type of information. But if we were going to make a change, if someone had said, wait, we need to change something, we have new hires here that we're looking to start later in the year. But if we said we really wanted to move we could change the start date for this particular employee and say, no, we want them to start the beginning of the year. You know, we want them to be here as of the beginning. And then we would just take out the comment because they're starting. Once we save that change, it goes into our system, or it goes into the system and holds the data. Now, this was just a simple date change, but when you change an FTE, like a person, and you move them up in the year, there are a lot of things that are going to happen. Their salary, obviously, is going to come earlier in the year. They're going to have their benefits start earlier. Tax implications, the payroll taxes will be changing. Everything will be calculated behind the scenes. Within the tool, we can see that this particular spreadsheet is doing staffing calculations, but you can see additionally it's calculating all of the salaries, any bonuses. There's a recruiting fee that this particular assumption is saying that when the person is hired, that recruiting fee gets paid. This moved now to be in January. It used to be here in April. But you can see all the tax calculations update so that they're starting with the January start date, as well as any FTE specific expenses that we have are all built into this calculation. Additionally, though, this particular FTE is a salesperson, which means they have implications around revenue. So revenue is being calculated based off of our sales force in this model. So within this tool, right, we have looking at this report, I have not refreshed it yet, so it still shows everything the same. But you can see there's revenue as well as my expenses on here. If I refresh this report now, all of those calculations were done when I made my change in adaptive. And now you can see my revenue has moved. It's increased because we've brought a salesperson in 4 months earlier. So they're going to be generating revenue earlier in our fiscal year, as well as our costs have changed. You can see our payroll has gone up, as well as our taxes, other office expenses, because the cost associated with a new employee being there longer, using supplies, is built into the calculation. So all of these calculations are being done within the model, while the manager of the area only has to update, hey, when that FTE is starting. So one of the advantages with a tool that's doing all these calculations is now if you are going to a more continuous forecasting process, people don't have to make a bunch of changes every month. They're not redoing their entire budget process. They're just making changes to what their original was. And then they can keep that going throughout the year. One of the ways that's accomplished is within the adaptive tool, you're allowed to have as many versions as you want. So there are quite a few out here, but you can see that you can arrange them into certain ways. So I can move through my fiscal year. So I create my annual plan. That's my first start. That's my benchmark. Banks love those. Boards love those. They're always going to be something that we have. It's going to be that. Here's my annual target. But then as you move through your year, you can create new versions of those as you go. So when you go to close January, so you have January actuals, and then your forecast the rest of the way, you might start with what the budget is. So you could create a quick copy of that, create a new plan. So we could call it my 1+11 forecast, something along those lines, where we're creating this naming convention so that we can keep track of where I have actuals and where I have my budget. I want to create it off of my budget, my working budget. We'll assume this is a final budget, and we're going to bring over all the same information from it. I don't want this one. So I'm creating from my budget my first forecast. And if I create, and once I save that, now I have my forecast. And the adaptive tool is configured to set up, when we do our initial setup, to bring in your actuals from your accounting system. So every month when you close your books, you bring over your actuals, and we would change the start of the plan for this one. Instead of being January, it's February. So now what will happen is I have my actuals from what has happened up through January of 2020 in this example, and then my plan data picks up the rest of the way. So now I could see what my full year projection is based on my actuals currently, and then plan the rest of the way. And then people can go in and make modifications to the forecast. So they go from what they originally set to their plan. Now they can go in and change anything that they want to do, but they're not going to be changing the original budget. So the budget is still there, still a version that you have, so you can compare it always to your actuals. But now I'm going to have a forecast. And you can do this then every month. So every month that you close, you can then create the next one and go, keep moving forward. One of the nice things is you can even create these forecasts before you've got an official close. And you can go ahead and create them and letting people know that the current month is still in flux. So your actuals are going to move. People aren't going to be adjusting their forecast for a closing month. Like when we're into February and we're closing February and March, you can create the February, the 2+10 forecast prior to actually being closed. People can start updating their further out months, knowing that they're going to get their actuals in on their close date. Then they could quickly review what's in there and make sure that they're good with what they're doing for their full year forecast, with 2 months of actuals now complete, and then 10 months of forecast. And then these forecasts, you can compare them all against each other. So you can create ports to where you're comparing your actuals against your budget and your forecast, what you did the previous month. So when I go to close February, I could compare my actuals against both the February budget, which was the original, as well as my February forecast that I did when we closed January. Additionally, you could compare these to each other. Like I can compare my budget to my forecast. So you can constantly have that discussion with senior leadership where you can say, okay, we're currently forecasting FY20 to be this. We originally budgeted for this, so you can see where the differences are. And now management can make those real-time decisions on how do they do course corrections, or is it something that's really that's what it's going to be. So now they have to figure out how that messaging goes, if they're messaging things to the board, or how they're positioning, you know, their full year projections with everyone. Being able to do this in a tool that's that easy to create multiple versions and compare them to each other, like in this report, I can easily change which versions I'm comparing to from each. So I can switch my versions just by making the selection here, and reports are set up in a way that you can do that. That's a very powerful tool, and I can't tell you how often I've been in places where you've been going through budget cycles, even if you're doing just your annual budget and you've got that, okay, we did the first pass, and you get the results back and they're not exactly, I mean, no one goes through a first pass of a budget and says, oh yay, we're done. I've never seen that happen. So you're going to do a second pass. And every time I've done a second pass, almost to a T, my CFO will ask me, hey, what changed from the first pass to the second pass? And then you're doing a whole bunch of stuff with Excel trying to combine things. Now you could simply run your two versions next to each other on a simple income statement report and see what changed. Not only can you do that in total, but I could compare every single month so I can see exactly where things changed. I have found that in the past, that's often something that happens with forecasting that's very useful because as you move through the year, sometimes you miss the first month, you miss the second month, but no one ever changes their full year projection. So now you can start to see where people are backloading a forecast. As they miss early months, they push it all to like November and December or October. And now you can start to see that. And as the analysts can look at that, now you can start to assign some sort of risk around your forecast because as people backload them, you know that the odds are slim that they're actually going to hit those when it comes to full year numbers. So being able to see that quickly and easily is something that you can get out of the adaptive tool. Now we talked about, you know, how you can make these changes. Everything is real time. You know which version you have because they're all numbered and labeled, and you as a system administrator are managing those. But we wanted to talk about reporting. So within the adaptive tool, you do have what's known as they have an Office Connect tool. Basically, it's Excel with a connection into your adaptive instance. So it has all of your structure here to be able to pull into reports. Now, this particular report is set up in such a way that it's incomplete. It doesn't have this information pulled into it yet, but it's there so that we can show you how easy it is to create these reports. All reports within Adaptive, it's built all with drag and drop. So you're able to find the account we're looking for. So these are operating expenses. Payroll is already there, but we want taxes and benefits, and I can hold my control key down and pull in all the expenses. I want to highlight these sections, and I'm just going to drag them and drop them. And now when I refresh this sheet, my data will be there. So now it's there. So this report, that is how you create reports with Office Connect. You're finding your element, be it GL account, an org level, time element. Any of these elements, you're pulling them in and dropping them into your worksheet to create these intersections of data. So these can be set up pretty much with any kind of combination. If it's a data point that's held within Adaptive, you can pull it into this report. Additionally, though, this is Excel. So I have the ability to write all my normal Excel formulas. So you can create any variance report you want. You can create any tables or charts. So all of your charts that you can do in Excel are available to you in Office Connect as well. So it really is one of those tools that if you have a set format that you're looking to do, you can bring that format into Adaptive and then create the connection that you need. So you don't even have to redo the report you're currently using. You can just bring it in and then start connecting it. So it's not like you have to rebuild it. You can just, make it live, basically. The other nice thing is this is live. If someone makes a change into the Adaptive tool and once they hit save, if I come into an Office Connect report and refresh, it will bring in that most recent data. So you could be sitting there. I always tell people that I can tell you how fast you can make the changes, but don't let your boss know, because then they'll want to make changes last minute all the time. But you could be sitting at your desk waiting to go to the meeting, and you're going to present this information, and you could open up your reports and immediately refresh them so that you know that you have the most recent data that's in the tool. And then you can go into your meeting knowing that I've got everything that's current. But the added benefit of this tool is, okay, that's all well and good, and we have the month end, but what happens when we go to the next month? So we load our actuals in, everything comes in. I've got to update all of these sheets. Well, with the Office Connect tool, it's as simple as rolling my date forward. So I want to move my date to the end of the next month. So now I've set my date of my report to be April 30th. And if I refresh all the sheets, the Adaptive, this tool uses, we set them up originally with a relational date, so that it's floating based on that report date. So while these reports were all set for March, now they go to April. So I'm here in April. The budget that is pulling in is my April. My prior year is now comparing to April, as well as everything. Every sheet within the report is updated now for April. So now when I go from one month to the next, my monthly reporting package becomes super quick. I just roll my dates and I'm done. So unless someone actually makes a change to a format where we're creating a new report, I don't have to do anything with this. Now, instead of taking 2 or 3 days or maybe a week, depending on how you can do it, to create those packages, you can spend your time actually looking at the data and coming up with the narrative components that go along with it, doing the analyzing it, more of that value add work that finance departments find themselves with limited time to do because you're just struggling to get the changes. That and the fact that there are always last minute changes. Someone makes a change to something and then you have to redo everything. Well, now it's as simple as pushing a button and then you can refresh your entire report for the most recent data that is available. But this really gives you the ability to be more flexible, not even with deadlines. I mean, still would like people to be done early enough so that you can review data, but now last minute changes aren't as terminal or as impossible as they might have been if you're just using Excel. So this tool though can also tie into PowerPoint. So within we have a PowerPoint add-in that also is Office Connect. So if you have a presentation, the board meeting, within this tool, you can update. I can refresh. So this file is tied to my Excel file. So my charts and graphs and everything are pulled into my PowerPoint presentation. They're here. I can refresh all of them. So these can tie to it. Normally, these files are coming off of our test server, but generally, you're able to just click the refresh. They're newer files, so I haven't gotten the links 100% set. But when you create them and you pull them in, you can click this refresh all button, and it'll just refresh all your slides for your most recent version of your Excel file. So you have the ability of tying both your Excel files that are used to create any kind of packages that you might be using internally, as well as PowerPoint presentations that are now pulling in my April information. So I no longer have to go through and spend all that time creating charts, cutting and pasting, getting them the right formats and sizes. You can update the entire presentation, and you can spend more of your time on any of the narratives that go into here. So you can update your verbiage so that you're able to put in you can spend more time creating the story to make it fit with the data and the presentation that you're doing. So that's one of the big powers with the Office Connect tool. And then the adaptive, with its power of its modeling, being able to write formulas within it. So we showed the sheet that was doing the FTE calculations. We're pulling in all the data from just making that change to run multiple calculations. Then you're able to create any calculations you want within the system. So you build your general ledger, and it would match up with your general ledger, but you do have the ability to create any custom account or metric account that you want to have. Those accounts can be anything, and you can build calculations within them the same way you would within Excel. As an example, so within the formulas, you can see this particular cell, you have the ability to write formulas within adaptive. And these formulas are written in such a way that you can lock these cells down so people don't overwrite them. We talked about breaking formulas before. We will say it's impossible for for a user of the system to break this formula because they can't physically write into here. Administrators, they're the ones that can break things, but it's their fault. They're the ones that are maintaining the system. If they changed something in it, they would know how to fix it. One of the things that the adaptive tool brings to the table is it is designed to be used and run by finance professionals. So you don't need any coding background. Like we said with the reports, it's all drag and drop. Formulas work the same way, to where you have the ability to create formulas straight through Formula Assistant, and it's dragging and dropping whatever accounts you want within the system into your formula box, and then adding them and using all of your multiplications, dividing, if statements, everything that you can use at your disposal to create the formula you need within the tool. But again, you don't need a coding background. All you need to be able to do is find it and then pull it in. So when you implement adaptive, you're working with the consultants that would help you do that. They're also working to train you so that you know how to make these changes into the system. So in the future, you're not going to need to call in a consulting firm to actually make changes to your tool. You're going to be able to do that yourself. And that's one of the goals, because we talked about how some of the best practices out there now are for continuous forecasting. A lot of companies are using them, but it also, with adaptive, their main push is the notion that everybody plans. So you're able to come into the system. Everybody in your organization could have access into this to provide the data that they need. So different sheets can be set up for different users depending on what they need to budget. So you can create specific ones for your sales team, and they're just working in those sheets to provide targets and information around revenue planning. But they might be providing just one small piece that then gets used by someone else in their planning process. But now you don't have to shoot emails around. They don't have to come through one central location. They can bring it all together into one tool, and your finance team now is much more proactive in how they can manage it.
There is a question.
Okay.
So Christy asked, are there data connections to various accounting software, or would the connections be to data that is exported from your accounting program to an Excel spreadsheet?
Okay, excellent question. The answer is yes. It can do both. So within the adaptive tool, you do have integration connections, and we can set those up to any accounting system that's out there. There are a lot of native pre-built ones within Adaptive that are easy to configure. For example, NetSuite has a pre-built one, Workday does as well. But we have the ability to create any connection as long as your accounting system is a typical JDBC type database. So as long as it has that, yes, we can connect it directly to the accounting system. However, you can also create connections to Excel files. So if you're getting a data output from your accounting system in the same consistent format every month, you can create an Excel integration that could do it that way. So it has the ability to integrate with just about anything. And that's one of the pieces that Adaptive has hung their hat on for a while, is their open APIs and ability to integrate with systems.
So Christy mentioned that they use Blackbaud's Financial Edge, and I would guess that Blackbaud has an API available that would export the data that you need in order for Adaptive Insights to pick that up.
Yep.
Do you see? I don't see it in, maybe I've got.
Right, yeah, it won't have a specific one, but that would be one we would connect through either what's known as a custom cloud data source, if it's a cloud-based system. So custom cloud connections are for connecting to other cloud-based data sources. The JDBC connector is for like on-premise or the server type ones that you might have in your local server farm. Okay.
I realized we have to head to questions, but we should probably do our polling question number 3. So who should be involved in the planning process? Everyone plans, budget owners, CFO controller, or board of directors? And while you're doing that, please feel free to ask more questions in the chat. At the bottom of your screen, the Zoom screen, you should see a chat button where you can ask us questions. We'd love to answer your questions after this. All right, yep, everyone plans. That's Adaptive Insights uses that as one of their taglines, is everyone plans, because they want to put planning in the hands of everybody. And I will say, keep in mind, we're not selling Adaptive Insights today. It sounds like it, but any tool that you use, I think you would want to look for some of the same functionality and some of the same things, as in you don't want to have to call the consultants back. You want to be able to own it, things like that. If you are looking for one, that would be a great way to do it. All right, so I'm going to pull up our questions. So Spencer asked, do you recommend using a static budget approach, set it once and don't modify it throughout the year, or more of a dynamic approach, updating throughout the year?
A lot of companies are moving more to that dynamic updated throughout the year. What that cycle is, it might be quarterly, it could be monthly. One of the advantages of using a tool like Adaptive Insights is you can create your model in such a way that the inputs that people have to put in are limited. I've worked in my past lives where I've created a model where my field managers put in like 5 data points. They were all statistical, things that measured markers around what their productivity targets were. And the adaptive model used historical modeling ideas to create the forecast for them. They always had the ability to overwrite and add to it, but basically it did a lot of the work for them. And a tool like Adaptive can be built with that. You can build your formulas so that now your continuous budgeting process is pretty simple, because it's updating as you're bringing actuals into the system.
And that brings us to the next question that talks about how to input the data. Now that January is closed, how do I input my actual results into an Adaptive? And of course, we'd recommend that you've got a link to that so that you're importing that and not keying it in. Worst case scenario, you've exported it to Excel and now imported it from an Excel file. But as we said, most of the time you can link up with whatever your ERP is so that it'll show up.
Right. The other thing to note with that, with the integration within Adaptive, is those integrations can be scheduled. So you can set a schedule for them to run automatically. They can run nightly. You could run them once a week. Maybe you set a specific date in the month when you know you're beyond close, something along those lines. But you can automate those tasks.
Great. And the next one is, can this solution forecast 36 months out and essentially replace our budgeting process today, but rather compile the next annual budget from a forecast? And we mentioned that a little bit earlier, but if you want to expand on that from a 36-month, I mean, you'd have to have forecasts that go out that far, right, Don?
Yeah, and Adaptive can do that. So when you set a calendar year or you set that version, you can make it go out as far as you want. You know, it can go just the year, it can go 2 years, 3 years, 5 years, as many years as you want.
And then by using those formulas and setting up modeling and things like that, it will do a lot of that forecasting for you. I'm sure
Hmm.
there's still some items in your budgeting and planning that you would have to determine, okay, we need to, override
Yeah.
this, do this. But
Well, and we have seen clients that'll do that to where they've got very detailed for their first year, and then past that, once year 2, 3, and 4 kick in, they're modeled. They're off of formula with high level assumptions.
yeah. Another question is, can you link to a payroll system that is separate from your financial software?
Yeah, so payroll systems are a little tricky. I believe we could. One of the challenges usually is around security. A lot of payroll systems don't like connecting to outside systems. So we generally recommend that you create, if you are able to create that connection, that you're bringing it into your ERP, your general ledger tool for the actuals. We can get downloads out of the payroll system and use those to do uploads to create those initial starting points for when people are doing their budgets, for making sure your rosters are all set, you have all the employees in there. But the live links become they're a little tricky because of the security.
There was another question I wanted to get. Someone asked, what's the cost of this tool? And it does vary based on the revenue of your organization. So if you're an enterprise organization versus a small one, and then it also depends on how many employees you have and how many employees you need to be using the system. I'd say the bottom end would be, and please don't quote me on this, but I'm not sure that you could do much with it for less than $20,000 a year. I just want to throw it out so that you know we're not, this tool in particular, we're not talking about a couple $100 a year. But as you look at it, you would have to determine your licensing and this was the case with most cloud-based, how many administrators do you have? Those people are developing the models, administering the users, things like that. How many people do you have who are getting into it and actually entering data, putting in their budgets, and then how many people are in a view-only mode? They have different licensing options for all of those. I say 20,000. I think that would be low end. We typically see things more running in the maybe 25 to 35,000 for smaller businesses, not under what I can't remember the employee cutoff. I want to say, do you remember, Don, what that first
Yeah, I
cutoff?
don't remember what
Yeah.
the first level is.
Most of our clients are in that small to medium business and they land in that general area.
Yeah, one of the big advantages, though, to a tool that's like Adaptive is it does not require additional resources. You're not going to need those. The system administrators tend to be your finance professionals. They're already the people that were running your budgeting process. It doesn't add a ton to their job, and then the things it takes away from them help fill that gap. As well as you don't need those system administrators. You don't need the IT resources to maintain it.
The other question then was talking about other similar budgeting tools available for less dollars for nonprofits. We were looking at this one recently. I did not see any nonprofit pricing on Adaptive Insights, and I am not aware off the top of my head of another one. Blackbaud, they're in that business. They may have an add-on tool that would be less expensive for nonprofits. I'm frankly not aware of one. So
Yeah, I don't know anything specifically geared towards nonprofits. There are quite a few players in this space that do provide a similar type of tool. The challenges usually come into how are they maintained, what are their differences that way? What are their limits? Adaptive has no limits around the number of versions or the amount of data you can have in it. Some limit the number of, how much data you can have into them. They're trying to keep those smaller. Um, but there are quite a few, and if you do searches through just like a typical Google search around adaptive insights, you'll pull up most of their similar competitors. I think there are tools out there from companies, Host Analytics, I think does it, as well as Anaplan, but there are quite a few that are out in that space.
And those would probably not be considered cheaper options. Those are other, fully functioning, more expensive options.
Yeah, they're similar. Pricing tends to be a little similar. Some of them can be a little cheaper, but sometimes that comes with hidden costs where we see it. We don't see a lot of hidden costs with the adaptive tool because you're not going to need additional resources or consultants past your initial implementation.
And that would definitely be an important point to look at when you're looking at any tool, is that ongoing maintenance, what it's going to cost you going forward. Just don't forget about that when you're doing your planning. Now, we're, like we said, we do represent Adaptive Insights, and we have other products, but we would be happy to talk to you about that, learn about your needs. And so if you have any, at the end of the slide deck, Amy, will you be sending this out to the participants?
Yes, it went out this morning.
Okay, great. So on there, there's an email address on the last page for Stuart, and you can contact him. And we'd love to follow up with you and talk to you more about it if you're interested in learning more about using tools for your financial planning process.
To the webcast. So thank you to everyone who joined, and thank you to Dana and Dawn. We hope everyone has a great day.
Thanks so much, everyone.